Alrighty. So good morning, everybody, and thank you for joining us this morning. My name is Elena Boyd. If this is your first time to Daring to Learn, welcome. If you guys have been with us before, welcome back. This is the June 2026 session of the Daring to Learn webinar series. We've got Ty Wolaver from the UT Center of Farm Management here to talk with us today about financial record keeping. Just a few housekeeping things on the front end before we jump into our session today. For those of you that have been on Daring to Learn before, you guys know the drill. We will have an evaluation form at the end of this session where you guys can provide feedback about the session, about the webinar, anything kind of related to this series. For our Tennessee producers that have joined us that are looking for that Tennessee Agricultural Enhancement Program educational credit, participating in Daring to Learn does help you work towards one of those special education credits for the application B, Producer Diversification, TAEP application. So that evaluation form that I'll have a QR code up at the end of this session, that is how you record attendance and track feedback for that. So just a few other housekeeping things. I see some things have popped into the chat already for some folks using those virtual assistants. If you have any questions throughout this webinar session, you guys can pop those into the chat box. There's a Q&A feature, there's a way to raise your hand, that sort of thing. If any of you have any questions that you think would be better for you to ask verbally, we can even turn your microphone on and give you a chance to kind of ask those rather than try to type it out if it's kind of a complex question. So I will go ahead and pass things over to Ty, and we'll go ahead and kick off our financial record keeping session.
Thank you, Elena, and thank you for having me here. I always love working with y'all. And so, as Elena said, slowly getting there, my name is Ty Wolaver. I work with the Manage program, which I'll talk more about here in a second. But just to fair warning, I am outside. We have a 2-month-old, and my 3-year-old is home today. They are both currently asleep. But if it were, that is why I'm outside. But if it were to start raining, I'm probably going to pack it up and head back in there. But outside of that, we should be good to go. The little taking a stint of paternity leave, but always happy to take a break from that to be able to help out. So, what we're going to talk about today is going to be basically just your simple record keeping. Now, there's some things I've talked about or that I've put in here that are going to be specifically put towards record keeping for value added dairy, but I'm going to go ahead and say up front that I am not the biggest dairy expert within the managed team. So, just to talk about that for a second, the managed program is a program located within something called the Center of Farm Management, which is in the Agricultural Economics Department at the University of Tennessee. But we work basically just like Elena does at the Center of Profitable Agriculture, or just like your typical county extension agent, is that you have questions, you shoot me a call. I either can answer, simple questions over the phone, or we set up and I come and sit down with you at a farm visit. We can set up record keeping systems. We can do business and financial analysis, and many other things just relating to farm finance. I know that everybody has absolutely gotten into farming, especially into value-added agriculture, because they just love keeping up with records and they love financial analysis. No, but it is also a very important part of it, not just for keeping your taxes, but to make sure that you are pricing things correctly, that you know how much money you've made, that you can be able to budget properly, and that's what we're there to help do. And the reason that I said that I'm not the expert on dairy within the managed program is because we have one specialist named David Bilderback. He works specifically within something called Dairy Gauge. He has a dairy background. He travels not only the state of Tennessee, but the state of Kentucky and North Carolina working with dairies. And so while I have worked with dairies in my area specifically and a little bit further outside of my area of Northeast Tennessee, he's kind of our local specialist dealing with that. But what I have worked with on dairies is record keeping, specifically setting up record keeping systems and getting reports made out the way that they would look. So I do have experience in that in and of itself. So to just jump right into it, why exactly are we going to not only want to worry about record keeping, but right as we're getting started, or if you didn't do it right as you're getting started, wherever you are at within your agricultural business, hey, why do we need to focus on record keeping system? First and foremost, even outside of financial record keeping, is those production records, right? What animal had a calf or a ewe, or it had a lamb, or a doe had a kid at what point in time? How is she due to be able to have one again here soon? Has she missed? How old is she? How what was weaning weight last time? All these different types of things, but focusing on more what I kind of hone in on a little bit within the financial record keepings is that you don't know how much it's costing you to actually produce the products that you are in the business of selling unless you've been able to track how much each input cost along the way. So, how much did I spend on feed, on seed, on fertilizer? How much on veterinary medicine, diesel, all of these different types of things go in to your farming business, and the products that you need to sell need to sum up as a way to pay for them, but also to make you a little bit of money on top of that. And truly, the only way to know how to do that is by keeping up with good, accurate record keeping. And sure, it can save you time and money and headache on your taxes, but in reality, we really want to make sure that we are budgeting correctly for what business that we're in, and that we know how, or that we can plan for the upcoming year. We can follow trends by focusing in on their cash flow, or we can prepare for whether or not we think it's going to be a profitable year, or planning several years down the road where our new business can become a profitable business going forward. And there's several different methods of record keeping. So first and foremost is going to be basically what we call the shoebox method, but really when we think about it, it's the shoebox, it's the dash of the truck, it's the glove box, it's that kitchen junk drawer, basically anywhere that we're just stuffing receipts. So believe it or not, step one of record keeping is actually just keeping receipts. This is why shoebox method is a true method. You just being able to be reference back to what you've spent for your farm throughout the year by going and looking at those receipts and maybe compiling them once or twice throughout the year is some type of record keeping. But if we can take that and move it to the next step of being able to keep up with those expenses and those incomes as they come in some sort of methodical and put together way, then that record keeping system can be a lot more useful for what we actually need it to do. Project out into the future, not just a picture of what the path looked like. So one of these is going to be the pen and paper method. Absolutely nothing wrong with this. If you're someone that just is not comfortable with interacting with technology, or you don't want to purchase some type of digital record keeping system, whatever that might be, having a good notebook and a well defined system for yourself where you actually just write down how much feed costs and sum that up throughout the year to get a good idea of what it costs for that year, and then we can project for the upcoming year. That's another method for it. Now, obviously, that's going to be a lot more involved, a lot more time consuming, but it's a tried and true method that can get the job done. Moving further from that would be something like a spreadsheet. So an Excel spreadsheet, or a free version being like Google Sheets, where we're just doing the same thing as we might do in a notebook. We're notating whenever an expense comes in, but then with this, maybe we can sum up the cells that go along with feed, or line them up side by side. So that way it's just a simple equation within that Excel sheet or within that Google Sheet to be able to say, hey, this is how much I spent on feed over this past year. Still can take a lot of time to set up, but once it's set up and it's the way that you like it, it's something that can make record keeping a lot faster and a lot more useful for your farming operation. And then finally, and I'll talk about a few of these different programs, we're going to move into actual dedicated record keeping systems that you can purchase for your farming operation and can actually count as a tax expense for your Schedule F. So just looking at exactly what some type of record keeping system is going to look like. First and foremost, we can see this is an example of a Quicken file. And let's say that you have your checking accounts synced right up to the Quicken. And I'll talk a little bit more about Quicken again here in a minute. But every single one of these transactions comes in. You can sit down, categorize that transaction, and not have to think about it specifically again, because then it's going to put itself directly into a report of your making. And so we have a report set up. And so each one of these transactions comes in. We categorize it. Maybe it's feed and mineral. Maybe we've paid someone to do some custom hay work, or even some of these other split transactions for loan payments or whatever it might be. We can see our income. Maybe we sold some coals. Maybe we sold some calves, and then also our expenses, right? So any type of, again, the hay work, even some depreciation, what it costs to produce my hay, all these types of things. The transaction is entered into the record keeping system. Don't have to think about it again, because then it gets summed up into some type of specific report, and you can watch it throughout the year to see what all of the incomes and expenses end up with for your farming operation. You can start to see where this can be fairly handy, right? Especially if you're someone that needs to be able to budget for your farming operation, which we definitely recommend. Then you take that budget and you match throughout the year, whether that be weekly, whether that be monthly, whether that be quarterly, against what your actual income and spending has been, and see whether or not you are on track for what you had projected for that year, or where maybe you need to rethink some things. Maybe, especially if you're doing value added products, maybe you need to increase some of your prices just because spending is going higher than what you projected. Being able to look at that and see, oh, I based my prices off of this budget, but it's looking like I'm going to go over $1,500 on this one specific spending category based off of where I'm at already this year. Then you can adjust that price and not say, well, dang, I lost $1,500 this year because I was not ready for an increase in that expense. You saw it coming beforehand. But these systems can be done, just like I said, on something like a Google Sheet, kind of the exact same way, with just a little bit more actual setting up, and then obviously manual entry. You're not going to get an Excel workbook without some type of extensive knowledge and some type of coding to actually link up to your bank account. That'd be much, very above my head, at least. So you're going to do some of this manual entry and get it all put in there. But you can get some of these same reports too. Can they be as aesthetic? Again, if you're very skilled with Excel or Google Sheets, sure, they can be fairly aesthetic as well. But chances are it's just going to give you the information that you need, and those sums are actually there. But it's not to say that you have to pay for a record keeping system. Pen and paper option, some of the free options that are out there can work just as well, as long as you're willing to be a bit more involved in getting them to that point. But when we are looking at some of the paid options, one that I hesitate to say recommend, but at least interact with fairly often on farms, because it's very popular among farmers, including my own family, is going to be the Quicken option. And in reality, the real reason that it's so popular is because it gets the job done and it's fairly cheap. So one thing is, if you decide to look up Quicken, you're going to immediately come across is it's going to try to sell you on Quicken Simplify. Quicken Simplify is Quicken trying to get into the business of personal finance, which is perfectly fine. I understand it as a business model, but it is not really, at least by me, recommended for using on a business, because, again, it's just trying to keep up with how much you're eating out. It's not trying to put together any type of profit and loss statement, income statement. It's not trying to look at a cash flow, anything like that. It's just trying to say, hey, have you spent too much money at McDonald's over the past quarter? Here's a good way to keep up with it. Uh, but if you start moving into a little bit heavier of an option for Quicken, we come across what's called Quicken Classic for business and personal. And you can do your personal finance out of this one as well. So there's kind of a double option built into that. I kind of call this the original Quicken because it looks similar. If we look back to the example that I had here before, this is the example of what it looks like on the dashboard. This is an example of what one of the reports look like. But it basically does what it's supposed to do for $120 a year. So whatever that comes out to a month, it's in the overall grand scheme of a farming operation, I at least think that it is affordable. Um, And this is something to where you can actually have the file saved to your computer. You have the option to back it up on some type of cloud software. So if that way something happens to your computer, you can go get that data. But if you're someone that does not want your data on the cloud, then you don't have to have it there. You can have all of your files saved directly to your computer that is related to your personal finance. And one of my favorite parts about it is that you can have tons of files. So other record keeping systems like QuickBooks, you get one file, one business, that is it. But something like Quicken, you can actually have several businesses saved um, through several different files, so that way, say, oh, I tried it, I set it up, I didn't really like the way I did it, just create a whole new file. Or if I want to keep several businesses separated, we can have several files saved through that way. Or my business separated from my personal, and you can just move through them as you need to, all for that same one subscription price of $120. I think it's fairly easy to learn, and it is easy to kind of run reports, but one that I get asked a lot of questions on, and I am fairly familiar with. And so, if you are someone that uses QuickBooks and you have questions, also feel free to reach out to me about the specifics of it. Is going to be this QuickBooks. Now, with QuickBooks, I actually prefer the desktop version. That's a personal choice, but having spent a lot of time working with both of them, the desktop, it gives you an annual fee. You're not going to get an increase in fee rate through it in the middle of the year, kind of like you can with the online version. It has a lot of useful reports and programs that just are, at least up to this point, not available on the online version. And I think that it's just a bit more intuitive to learn how to use. I'm not going to go as far as say that it's easy, because it is a full accounting software. Like, this is QuickBooks is made for no matter what size business you have. It is going to fit your operation to create invoices, accept bills, uh, just a good double entry accounting software. But it's not horrible to have to learn either. If it is something that I say that any farmer can learn how to use, no matter what. If you can figure out how to farm successfully, you can QuickBooks will be a whole lot easier than that, especially. Um, that being said, the desktop version, some of the support is fading on it. They only have technical support and software update support for the most recent version of the released desktop version, and one version removed from that. So if 2024, which I think it is the most recent desktop version released, and before that, I think it's 2020. So 2020 and 2024 desktop versions still have tech support, but the versions before that do not. So if you were to purchase, say there was one released in the upcoming year, the 2027 version, they released another version in 2030 and another version in 2032. Then in 2032, your support would disappear. I think that's a big issue, but QuickBooks is trying to move people towards their online platform, which makes sense because they can just set up data centers that hold all the data on it. So whereas the desktop version, you actually have your files saved to your computer, and so bug patches can be a bit more expensive for them to use. They have the service center set up, and they can charge you monthly, and they can charge you more. So there's a few step back before you get to the $110 of version of QuickBooks, but just from what I've worked with, the $110 a month version is essentially the bottom level that if you're using QuickBooks that you're actually going to want for your business. And so it's even more expensive than the desktop versions on a year-to-year basis. Um, it's where QuickBook does want you to be. So if you call tech support, you're going to have someone on the other line fairly quickly. They're trying to really get people to move from desktop to online. Like I said, it is cloud based, so that does mean that you sign in on one computer. You're somewhere else. You borrow your buddy's computer. You can sign in on his computer too, and it's the same as you can just log right in and pick right back up where you left off. That is a big benefit behind it. It's not saved to your computer. I wish that there was a way to actually save it to computer. Sure, you can save all of the data as an Excel sheet. That doesn't really make sense for something this powerful. But whereas like the desktop, you actually have the files on your computer. With the online version, you just don't. Um, and then also, my biggest pet peeve with the online version of QuickBooks is that it lags during times of high demand. So a lot of people do a lot of their record keeping on Friday afternoons before the weekend. You're going to see a lot of loading screens and maybe even some features disappear for a couple of minutes at a time, and a lot of like having to reload screens on Monday mornings and Friday afternoons because everybody's doing it all at once, and QuickBooks obviously does not have the server space for everybody to be on there. You would think that if they want everybody to move to it, they'd have more server space than they even actually need, but they don't. So if you're choosing between QuickBooks, I still kind of lean towards the desktop version. But I also, just because of how costly it is, let's see what else is out there. There are other record keeping systems out there. I know I get asked a lot about the Ambrook Research record keeping system. I've heard good things about it. It's still pretty cost prohibitive. It has a similar cost to QuickBooks, but it is set up specifically for farming. I unfortunately don't get to play with all of them, all the record keeping systems out there. But I'm willing to try to learn it if you have some other record keeping system and you're trying to figure out more information about them. So that's kind of my spiel on those specifically. One reason that a lot of people do or are thinking about getting QuickBooks is because QuickBooks has payroll. So it's not, you don't pay for QuickBooks and then automatically get payroll. It is an additional fee of $50. This is the baseline, $50 a month, plus $6 per employee. That can go up to $75 a month plus $12 per employee. I don't really see the benefit in stepping up to the next level, but there is that monthly flat rate plus employee cost each month, and that's on top of your monthly subscription or your annual subscription for QuickBooks. So again, pretty cost prohibitive for the payroll. I will say that if you're someone that has an accounting firm do the taxes for your farm, which is pretty much what I recommend as well, some accounting firms out there are willing to do your payroll for you in as much as they tell you how much tax federal withholding to keep back each time. If there's anything like child support or other garnishments of wages, they'll tell you how much to keep off on that. Or if the employee has selected things they want to keep kept back, whether that be prepaying for taxes, which I don't know why anybody does, but uh, on the personal side of things, or just trying to do some other savings accounts, health insurance, that kind of things. Some accounting firms will do that for you. And if the person you work with will do that, I highly recommend looking into it because they're tax professionals. And you know that if they at least have that liability, that if they did it wrong, it's somebody that you can go back to and try to get it fixed before the government complains to you. But if you're someone that's already using QuickBooks, yeah, go ahead and do the payroll feature in it if your accountant can't do that. It is a good payroll system. Once you get each employee set up, it's pretty easy to work with. And you can you can enter in the hours at the wage rate that your employees are working each week. And then it'll do the withholdings for you once those are set up, and you can just move on. There's not much else that you can do. And at the end of the year, the W-2s kind of create themselves. So, payroll in QuickBooks, fantastic. So if you're already using QuickBooks or you know you're going to use QuickBooks for your business, highly recommend the payroll feature in there if you need to do payroll. If you're wanting to avoid how expensive QuickBooks is, though, one pretty much the kind of most frequently encountered payroll system out there that I run into is something called Gusto. And so it's a similar cost to QuickBooks. I actually think that it's $49 a month and $6 per employee. So save all of $1 a month there. But it can kind of fit into whatever record keeping system you're already doing. If you're doing W-2s, I'm going to tell you, you probably should be doing handwritten records, though that's still obviously still an option. But if you have something like Gusto built into with some other record keeping system, let's say Quicken, Gusto does all of the work and as far as doing the withholdings for you, and it'll just send the charge to your account and you can just categorize that as W-2 labor or something like that. And then within the actual Gusto application itself, you can see how you've been able to do that. So those are kind of my recommendations for record keeping systems. And if you have to do payroll, those different things like that, refer to your accountant on whether or not you should be doing W-2 or 1099 and employees. I do think that's a pretty important distinction that you should be aware of as well. So whenever we're wanting to set up a record keeping system, whether we're starting fresh, just starting a business, or trying to being like, dang, the guy with the red beard in that webinar one time said, hey, I need to actually have a record keeping system. And he sounded pretty convincing. Step one, open a designated bank account specifically for your farm. Go to wherever you already do your personal checking. tell the teller that you just want to open up another personal checking account. Um, Personal checking accounts have lower minimums. They uh, typically don't have fees associated with them as long as you have the minimum amount in that account. And so you can just kind of work with it. The important thing is that you just have some type of separation between your farm and your personal. Now, with this checking account, that doesn't mean that you can't take money from your personal checking account and move it into the farm checking account or vice versa. In fact, that's why I want you to keep them at the same bank so it happens immediately and there are no wire fees associated with it. It just means that every time that you have an expense that comes from or that is for the farm, it comes out of that farm's checking account, separated from where y'all went to the Mexican restaurant on Friday night as a family, right? So that way that doesn't get lumped in with those farm expenses, and you have a good way to keep up with that as well. Same thing kind of with a credit card. If you want a farm credit card, as long as you know you can pay it off before it collects interest after 30 days, have one completely separated for the farm. You can use those benefits personally, but keep the actual farm credit card separate from your personal credit card. It is too easy for things to get mixed up and expenses either be forgotten, so that way you're paying more taxes than you should be, or personal expenses leak their way into your farm business. And if you were to ever get audited, obviously that become a pretty big mess. Designate after you have that bank account, designate some categories for revenues and expenses. You know what your business is. So you know what value added products you're selling, whether it be milk, ice cream, soaps, lotions, all those different types of things. So those are going to be your incomes, and then be able to keep up with the expenses associated with those underneath some different categories as well. So whether that be cost of goods sold, whether that be the milk that goes in to produce them, and yes, that is something you should keep up with, even if this milk you are producing, or the feed, the seed, the fertilizer, everything that is associated with the farm, have those categories laid out for your farming operation. And do keep receipts. Receipts are a great way for you to see, say, I have my Quicken account updated or linked to my checking account, and I see this random expense come through of, from business AM 47382 for $50, and I have no idea what that was. It was a week and a half ago. I'm just now sitting down with my records again, but I can take out my receipts. I can see the $50, so that matches specifically for the date and the amount, and now we can categorize that expense for, say, it was $50 on fly spray or something like that, whatever it might be. You have those ready to roll, and by having those receipts, you can keep up with those correctly. And also, there's a chance that an audit could happen. Technically, as a business, you are supposed to keep, I believe, that's 6 years versus of records, plus the current year for 7 years total worth of records. And so the receipts are an important part of that. And then finally, pick a time to sit with those receipts and categorize them out. Try to do it, every week, but at least every month to sit down and reconcile it against your bank account or against your credit card statement, and kind of fill out those categories for revenues and expenses on the farm. And then pick some times throughout the year, whether it be, monthly or quarterly, or biannually, to put together some financial statements as well. And we'll talk a little bit about what financial statements might mean for your farming operation. It is starting to rain on me. Let me see if it's going to be too loud. Elena, is the rain too loud? I'm not.
I don't think so. I can't hear it.
Okay, still hearing me all right then? Okay,
Hmm.
just wanted to make sure. Hopefully it'll
Sounds good to
pass by
me.
soon anyway. All right. So what exactly goes into each one of these transactions outside of those categories associated with it? So first and foremost is going to be when it happened. It's going to be pretty important whenever we're trying to put together something like a cash flow. We're making sure that an expense or a revenue lined up within our specific tax year. Next can be something like a check number, so that way you can match those again where you're writing those checks. Who you're paying, you know, can be fairly important, so you can see where the money is actually going, and you can line it up. If someone says that a bill is due that you haven't paid and you have evidence in your record keeping system, that can be a good way to back that up. Notes, sometimes you just want to have some type of little blurb to go along with what you're doing. That category that we talked about to actually compile the reports along with your expense line items. And then something called the tagger class. So if you're somebody, often in the beef context, we'll have someone that has a cow calf operation. And then they'll also do some background, and then they'll do some finishing. And we want to keep those separated. So if you're doing the value added dairy business, maybe you do sell some milk. So you got, your commodity check. You want to keep those separated from where you are creating, your bottled milk, your soaps, your lotions, things like that. We want to be able to track the expenses and revenues that go along with those commodity sales and with those value added sales. So be able to designate your tags or your classes to go along with those. Um, but as a disclaimer, there's going to be some things you're not going to be able to split. We call that the overhead tag as well. And then obviously whether or not it was money coming in or money coming out. So the payment or the deposit and the amount that is associated with that. And then some of these transactions are going to have multiple things along with that. So if you're someone that is let's say paying off a tractor, and you have a monthly payment on that tractor of $600. Well, if you know anything about a loan payment, you know that some of that loan payment is principal. So, in other words, actually going towards the cutting down the amount that is owed on that loan, and some of it is interest. So part of that loan is actually going to go towards interest expense. And as you can see, when I made this example specifically, interest rates were much lower than they are now. But we're going to have, some part of that principal that is actually going to go to pay down that tractor, and then the interest expense on top of that. Now, this is important because the interest expense just to go on your Schedule F. That's taxes. That's an expense category. That principal payment does not. But the principal and the interest amount are going to change every month as well, with the amount of principal owed increasing and the amount of interest expense decreasing month over month. So it's important also just to pay attention to how much is going to each of these, and then have these actually separated within your record keeping system, so that way whenever it is time to do your taxes and you know that interest expense actually goes on that Schedule F, the profit and loss from farming, the principal doesn't, payments don't. You already have those split. You click run your report and you can see specifically what those go on. But sometimes maybe you'll pay off the monthly co-op bill and you'll have a couple $100 towards feed, a couple $100 towards, just random supplies, maybe a couple $100 towards veterinary expenses, whatever, veterinary supplies, whatever it might be. And you can have those split up within a good record keeping system as well, just so the reports kind of reflect exactly what those categories are, and you can pay attention to each one of those and track them against your budget. So, what are we going to do whenever we have all of this information put together? Uh, well, each transaction is going to say several things. So every time that you spend money, that's going to go towards your cash flow. And whenever we're being honest about it, we're not worried so much about profit on our farm as we're worried about cash flow, because we want to have more cash in our bank account at the end of the year than we had at the beginning of it. And so we're going to want to pay attention to that. But also it can help with that profit and loss, that Schedule F from farming. And then we're going to want to pay attention to things like asset sales and purchases that don't necessarily always fit on either one of those things, because maybe we used a loan to buy something and we had some principal payments to go along with that, whatever it might be. But altogether, the years of transactions are going to tell a story for your farm, and they're going to tell you how well your farm is doing and where exactly you might be able to go forward with it from there. So first, it's going to help you be able to create your balance sheet. So a balance sheet is something that needs to be done once a year. It is kind of like a snapshot specifically of your farm that says what you owe and what you own on the farm. So we're going to say, how many cows we have, how many tractors we have, what is their values, how many acres of land, what's its values, but then also how much money do we owe specifically on the farm too. A balance sheet is very important if you're trying to obtain capital, say for a loan, for your farming operation. But it also is a good way to see how your ability to pay off the debts that you're going to owe over the next 12 months are. So if we look at this top line, we have our current assets and our current liabilities. Well, with our current asset, if our current assets are higher than our current liabilities, this means that I have the cash to pay for the amount of money that I need to pay off, that is immediately due over the next 12 years, or at least cash equivalents to go along with that. And then there's some other things that we could go deeper into onto the balance sheet, but just kind of keep it that short. A balance sheet is important for your farm, and if you want to create one for yourself, you can. But again, reach out to myself or your local extension agent, and we can help you get that put together. One important thing that I do want to mention, whenever it comes to taxes, is going to be kind of two separate sections actually on the balance sheet. So within your current assets, you're going to have, say, calves that need to be sold, or some of those value added products that are held within your inventory to be sold, and that's going to be put on your Schedule F as normal income. However, your breeding livestock is actually not going to go on your Schedule F whenever you buy it and sell it. So if you were to sell, say, a cow that didn't get bred and you're selling her as a cull cow, you bought her a couple years ago for, say, $1,500, and now she's worth $3,000. Then you bought her for $1,500, sold her for $3,000. That's a capital gain of $1,500. That's going to be taxed at roughly a 15% tax rate instead of a Schedule F income that is going to be taxed at, so let's say 12% as your income tax rate, plus an additional 15.3% for self-employment taxes, for a total taxation on that mama cow of over 30%, rather than just that 0 to 15% in capital gain. So make sure that you're keeping your sales of your current assets, or what you're actually in the business of selling, separate from those long-term investments such as cattle, tractors, land, things like that. So, separate from the balance sheet, and what most people think of whenever they think of what they're doing for their record keeping system, is going to be for the income statement, or also called the profit and loss statement. So, this is going to show the applicable revenues and expenses that actually go into your farming operation. That is basically what you get taxed on. It's this thing we call profit. So, you take the amount of revenue that is on the income statement, subtracted by the amount of expenses that are on there, and you will pay taxes on that difference, right? So this is what we're doing whenever we're filling out our Schedule F form. It is what we're doing whenever we're trying to keep up with our income statement. It's what we are talking about whenever we say my business was profitable this year. Um, in reality, what an income statement is doing is kind of showing how your net worth changed. Did you make more revenues than you did in expenses of that year, and therefore increasing your net worth? Or did the opposite happen, to where you actually had a loss for the year, and so your net worth decreased? Um, but in reality, there's some things that aren't going to go with on this Schedule F, or within the actual income statement in and of itself. So something like the sale of equipment or the sale of breeding livestock. So just like we talked about, for tax purposes, the sale of tractors and breeding livestock don't go on that Schedule F. It's because they don't go on your income statement whenever you buy them or sell them. So you have cash in your bank account that you use to buy those breeding cows. The cash went out of your bank account. The same amount of value of breeding livestock showed up on your balance sheet. Therefore, your net worth didn't change. So it doesn't go on the Schedule F because there is no change in net worth. And same when you sold them. You had the value of them sitting on your balance sheet. That disappeared. It showed up as cash. No change in your net worth. Therefore, you don't put it on your Schedule F. You don't pay taxes on the income of it. It doesn't go towards your profitability. Um, that's just kind of the reasoning behind it. What you really just need to know is that whenever you're keeping track of your records, you want to make sure that on the reports for your income statement, for your profit and loss statement, that anytime you buy or sell equipment, or that you buy or sell equipment, buy and sell livestock, off farm income, doesn't feel like I need to say that, but it does not go on your Schedule F. Just have seen it happen. And tax person's fault, not the farmer's. And then things like contributed capital, so money that you're taking from your personal bank account and putting it towards the farm, that also does not go on your Schedule F income. Just making sure that what goes on the Schedule F, or what goes on your income statement, goes on there, and what doesn't. So that way you are not having to overpay on your taxes, or you are not thinking that your business is more or less profitable than it actually is. Because whenever we're thinking about profitability, we're thinking about, again, that increase in net worth. And so it's important to make sure we know what goes into that change of net worth for your farm, which is also why it's important to have a balance sheet, right? So there are things that go onto the income statement that won't necessarily go across your bank account as well. So something like depreciation that you are paying. So depreciation is what we call a non-cash expense. We all know the adage, you buy a truck, the moment it rolls off the lot, it's worth a lot less, right? Uh, that worth a lot less is the depreciation on that vehicle. And so we get to actually count that expense on our farm. It's going to go onto that Schedule F. But the amount that the depreciation is needs to be determined by a tax professional. There's a fancy form called the uh, MACRS sheet or grid, something like that. Anyway, it's the how tax professionals determine how much depreciation you actually owe on the farm, and that's what we're going to use to determine how much depreciation it is. So that tax professional needs to tell you that amount. So our depreciation doesn't get to count as an expense, or I mean our principal payments don't get to count as an expense, or whenever we purchase an asset, we don't get to count it as an expense. But if we have a loan on that asset, the interest payments do. So the amount of money that basically doesn't get to take away from the amount of loan that you still owe, but you still have to pay it anyway, the cost of borrowing money, right? That gets to actually go onto your Schedule F. And then also anything that you were to pay out to, let's say that the farm account puts money into a traditional 401k or a traditional Roth IRA, those things actually get to be put as an expense on your Schedule F2 and we get to be pre-tax. So if you're someone that wants to use the farm as a way to build up yourself for retirement, hey, you might be able to actually save some money on taxes by focusing on that too. And so instead of looking at it at everything onto the farm, a profit and loss statement is not going to take all the money that comes in. So you're going to see cull cows missing up here at the top from the last one we looked at, and is not going to account all for all the money that is going out. So you are not going to see principal payments down here in the expenses, but it is a mix of all of those things that we need to pay attention to and that we are actually going to be taxed off of for each farming year. That is important to have the records to back up to prove each one of those things. So, whenever we're doing this, though, we talked about having some of those tags and classes. We want to keep those actually separated for our farm. We want to have well organized receipts. We're going to be able to actually keep up with our profit and loss statement in a way that we are prepared to know how our farm has done over the past year, but also what we need to prepare for whenever it is coming from taxes. The last financial statement that we talk about whenever we are wanting to keep up with our records is going to be the cash flow. And I said before, but this is actually what you as a farmer is focused on. So it can be great to say that, oh, my farm was profitable. I had, a profit of $3,000 last year. But in reality, the amount of money in your bank account decreased by $5,000 within that year. What the heck happened? How can I prepare for it? Where did that money go? How can I be ready for next year? Because as the amount of money in that bank account decreases, it doesn't really matter how profitable you were. You need that cash in your bank account to do things like pay the light bill, right? And so this cash flow is also going to be split into a few different sections. So first and foremost, we're going to have our cash flow from operations. This is what you're in the business of doing. This is what we're mostly focused on. Did the value-added dairy products that I'm selling actually make themselves money? Did they bring in more cash than they actually expense themselves out? Then separated from that is going to be this cash flow from investing and financing, which I kind of lump together. And I know that this sounds like some type of fancy Wall Street terms. Whenever I say cash flow from investing, that is just buying and selling capital assets like tractors and breeding livestock. And from financing, that's whenever we either take on debt or we are taking that money from our personal checking account and put it into that farm checking account. So it is also just normal business activities that we have those terms applied to for. So we're going to use these to actually see, hey, did my farm actually take care of itself with the amount of money that I actually spent on it throughout the year? Did it make what I consider making me money? Did the amount of cash in my bank account increase so that I can actually pay those taxes I've made off of the profit? Or do I need to be able to plan for this upcoming years? Do I need to restructure debt so that way I have more cash available throughout the year? Do I need to maybe sell some assets that are costing some money, or do I need to take on more loans so that I have maybe an operating line of credit? Whatever it might be, all to the service of making sure that you have the cash in your bank account to pay for your expenses, take advantage of opportunities out there because you have cash in your bank account, right? Or just be able to line up those expenses whenever they are actually occurring. So let's see exactly of why that might be important for your farm. Skipping over one slide there. So let's say one year you brought in revenue from your dairy of $61,000, you had an expense of $58,000 on your Schedule F. Congratulations, you were profitable for that year. You had a net profit of $3,000. You kept up your records, so you actually know this. But let's say you also had total capital sales. So maybe you sold a couple of cows for $4,000, and then you had principal payments on some of your loans for $9,000. So that cash flow from investing in finance was actually negative $5,000. That $5,000 took away from the $3,000. So even though you are profitable, you owe taxes. You actually have $2,000 less in your bank account from at the end of the year than you had at the beginning of the year. This can be important to make sure that you're getting prepared and budgeting ahead for to see this coming. But also, if you're not keeping good records, you're going to see that negative $2,000 in your bank account, and you're going to think that your farm isn't doing so well, when in reality, it is moving in the right direction. Alternatively, let's say that again you brought in that revenue of $61,000, but this year you had $65,000 worth of expenses. So you actually lost money on your farm for that year. If you didn't have good records, you might not see that coming because let's say that you sold a tractor that year for $15,000. You still just had those principal payments of $9,000 so that you had a net increase in cash flow from investing and financing of $6,000. So you have $2,000 more in your bank account at the end of the year than you had at the beginning. You might, without your records, even say, whoop, I owe taxes on $2,000, but hey, I made some money this year. Maybe I can even go prepay for some expenses. And then next year comes around, for some reason, that tractor that you sold didn't just spontaneously appear back on the farm. So you don't have that $15,000 worth of capital sales. You still have some principal payments, probably even totaling more than $9,000 for the year, though the interest expense would be lower. Combine that with that $4,000 loss in net profit, and you're looking at something like $13,000 decrease in your bank account for that next year compared to the year before. And that could come out of nowhere, right? And do you have the cash that available to actually handle that kind of loss, whatever it might be? Or are you going to have to do some debt restructuring or sell some things to pay for your expenses in the short term? So cash flow is what we're focused on. We need that income statement because we're going to have to pay taxes. We want to see how well our farm is doing, but in reality, we want our cash flow because we want to know whether or not I have more spending money at the end of this year than I did at the end of last year. And it can all fit into the budgeting as well. So with those categories that you are using in your record keeping system, you can keep up with all of the incomes, all of the expenses for your farm. These variable expenses are going to be the expenses that are tied directly to your production. So you need to make sure that your revenue is above those variable expenses before they can start paying for those fixed expenses, which do not change on a year-to-year basis. And we're going to want to keep up with these records. We're going to keep making these budgets. We're going to really be focused on that because if you can't make it work on paper, it's hard to make it work in practice, right? We want to be able throughout the year to see how our income and our spending is tracking with what we expected to happen at each given moment. And be able to plan for, hey, am I going to need that operating loan for this upcoming year? Because I see that even though I think it's going to be a profitable year, I see my cash becoming negative somewhere around mid-year before I finally have product to sell off of the farm, whatever that might be. Just being able to plan before it happens, so that way you have several options because those events are far out, and you can plan accordingly. So, records specifically for value added, and this will be kind of wrap up. And so, if y'all have a few questions, I'd be happy to take those. Um, the biggest thing that I would like to point out for whenever you're doing value added production is that input of milk can feel free. You've raised it, you have the cows that produce the milk. So that input is either $0 or maybe even I'm just focusing it on being on the cost of that production that has gone before me. But by holding on to it, you are missing an opportunity out there to sell it. So let's say that the milk is going for $24 a hundredweight. Then on your budget for your whatever be bottled milk, your soaps, your lotions, cheeses, ice cream, all those types of things, the input of milk needs to be $24 hundredweight. So if that was what it's going for, whenever you could have sold it, that's the cost to your production. And each time that you are denying that sale, so instead of taking and selling that milk on the market for $24 a hundredweight, you are taking on more risk, and you'll be able to be prepared for that risk as well. So whenever we're thinking about pricing our products, we need to remember how much milk was lost and or how many inputs were lost just through the natural attrition. Hey, you dropped it. It went bad. Something broke. Whatever might have happened to it, right? We got to account for those in there as well, and that's risk that you're taking on within your farming operation. If you're not someone that is worried about keeping track of your time, whenever you're just raising cows and selling calves, collecting milk, all those types of things, because you think whatever the profitability is going to be, that's your cut. Well, once you decide to move into the value added section of things, you need to keep track of your time, because now you're spending more time to produce this value added product than you really needed to if you had sold that commodity up front. So in total, you need to claim either the higher cost of production of your milk or the value that you could have sold that milk as a commodity off of the farm. You need to keep track of your labor. And then also you need to keep track of both that product that didn't make it to being finished out, but also any product that's not going to be sold. Natural amount of business, especially when you're starting to produce at scale, is going to be that not everything gets sold before it goes bad. And you need to be able to price that back in to your selling as well. So whenever you're trying to price all these things out, it's all going to come back to those records. How much did it actually cost me to produce it over the past year? And that is whenever you're going to be able to price things so that a profit can be achieved and that a cash increase can be achieved as well. Um, Ideally, this is done on an enterprise basis, kind of like we talked about, keeping the cows separated from the feeders, separated from the milk, separated from the value added products. But we know that that is not always realistic. So if you're needing help pricing some of these products, um, we in the Center of Farm Management have created a decision aid tool to help you price value added products. Um, you enter in how much it costs you to produce, how much you think you can sell, not how much you produce, because remember, not everything is actually going to be sold, right? And then you can be able to price those products from there. If you have more than 20 products you're selling, reach out to me. Recently, I was able to write out a Python coding script that can hold up to 150 products, and I'm going to try to increase that later. But if you're someone that knows you're going to have a long list of products, reach out to me. Again, I just need the cost and how much you plan to sell, and we can get those priced in as well. So with that, thank you again, Elena and Center of Profitable Agriculture, for allowing me to speak to y'all. If there are any questions, I'd be happy to answer that. And if you need help working on anything that I talked about today, feel free to email me or call me, and we can get that set up.
Awesome. Thank you so much, Ty, for that great information. For those of you that are live with us, if you guys have any questions, now is the time to share those. Like we mentioned at the beginning of the call, you can feel free to pop those into the chat box or raise your hand, that kind of thing, and we can answer those because we have just a few more minutes to give time to questions. Um, what I will do now, Ty, if you don't mind, I can go ahead and pop up that attendance and evaluation form. So the QR code for that. So I will share that now. And as we said, if you guys have any questions at all, feel free to ask those. If not, the QR code that is up on the screen that will track your attendance for today. And if you guys have any questions that maybe for some reason you don't feel comfortable putting into the chat box, you can either send those to Ty to the contact information that he shared above, or if for some reason you um, don't have that saved or anything, you can send those my way and I can pass those on to him. Thanks, April. If you guys don't have any questions, once you get the QR code for the evaluation form for this session, you are free to hop off, and we will come back next month in July. Our July webinar session is going to cover YouTube Studio Basics.